Eurozone shares slide 1% after ECB pointers at bigger charge hike in Sept, corrects typo in paragraph 1. European stocks hit session lows on Thursday after the European Central Bank signaled a better interest fee hike in September because it raised its inflation forecast and reduced financial growth expectations for the year. The Stoxx Euro Area Stocks Index, which recouped nearly all its consultation losses after the Imperative Bank kept its benchmark interest charge unchanged, rapidly reversed course to tumble 1.4%. All fundamental bourses in Europe fell 1% or extra, with Italy's MIB down almost 2%. The primary financial institution stated it would end a long-running bond shopping for scheme on July 1 and raise charges through 25 foundation points for the primary time in a decade subsequent month and probable by a larger margin in September. They did upload an express caveat that they'll don't forget a bigger hike to be warranted in September, depending at the inflation outlook by means of then, said Ba van Geffen, senior macro strategist at Rabobank. So basically, they're putting extra weight on the updated projections in 3 months from now. That does make it look a chunk extra hawkish. The ECB said inflation is visible averaging 6.8% this year, nicely above the 5.1% predicted in March in addition to its target fee of 2%, whilst financial increase for the year became cut to 2.8% from a previous forecast of 3.7%. The region's bank index fell towards consultation lows, earlier than improving some ground. They have been remaining down 0.2%. A upward push will in all likelihood be fantastic for European banking stocks, and marginally terrible for different sectors, but the effect pales in evaluation to the issue of Europe's get right of entry to strength, stated Robert Alster, Chief Funding Officer at Close Brothers Asset Management. Investors will now appearance to U.S. consumer charge inflation figures for May, a key information set ahead of the Federal Reserve's coverage assembly next week. Inflation is seen rising month-on-month and will see money markets start to charge in a greater hawkish Fed. The U.S. critical financial institution has signaled fee hikes this month and the following, most in all likelihood by means of 50 foundation factors, earlier than it pauses for a facts check. But bets have risen that extra will follow. Losses in Europe were in large part broad-based, with industrial shares, healthcare and miners weighing the maximum. In a post-decision press conference, ECB leader Christine Lagarde stated the principal bank can deploy new contraptions, if vital, to deal with fragmentation, and excessive widening of yield spreads that might endanger the transmission of economic coverage throughout the location. The tail corrects typo in paragraph 1.